Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Welcome to the show, everyone. Seth Udinsky and Samuel Case with you this morning. Folks, keep Mark Manila, our host, in prayer this morning. He has a full day at the National Religious Broadcasters Convention today. He is on so many interviews, so many radio stations, so many TV stations. He is not able to do the show today, so we are covering for him today.
It's like the Radio Olympics.
The
Winter Olympics is going on, but we kind of have our own Olympics, too. So we probably should get a medal.
I think so too, or at least Mark should.
Yeah,
for being on all those stations. Keep him in prayer. Wonderful opportunity for the ministry at NRB, so we're real excited for that. Michael Cardinal, our CEO, doing great down there, having a blast. So Mark will be back with us, God willing, tomorrow. But you can keep him in prayer today, full day. But right now, folks, we're going to be with you for the next hour, and we want to hear from you. Give us a call, 610-363-1110. Sam and I have a goal today. We're going to answer a lot of questions today, folks. We've got a big backlog of questions. You've got questions. We got answers. So, but if you want to call in and talk to us, please do so. We would love to.
Feel free to derail us.
That's exactly right. You're welcome to do that.
If you don't, I will.
That's right. Number is 610-363-1110. Again, your calls and questions if you want to join the conversation. Super Bowl betting numbers are in, by the way, and they are not pretty. We'll see how big a
It's not betting, Seth. It's trading.
Sorry, trading numbers, as we'll see.
You're trading your bets.
We'll see how big a year-over-year increase this was from last year. First and foremost, though, Sam, it is Winning Wednesday, and I'm excited to bring a great win for you here today, folks. So it looks like the FTC, of all things, Sam, is probing transgender surgeries for minors, trying to put a stop to this. We love to see this. Sam, what's going on?
Yeah, isn't that kind of odd? I mean, listen, I'll take it. It's the Federal Trade Commission. I think it's their product safety arm. So they're saying, hey, medical organizations, you have a product and it's certainly not safe. So we're going to have to take a look into this. What they're doing is they're launching an investigation specifically into the American Association of Pediatrics and the World Professional Association for Transgender Health, or WPATH. WPATH is really bad. They're the ones that really set the guidelines on all this stuff, and people just accept them as gospel. The probe particularly focusing on their continued support for gender transition procedures for kids. Both organizations have published clinical guidelines on gender transition. WPATH in particular previously recommended certain surgeries for kids as young as 15, later even dropping recommendations for age altogether. They said it doesn't matter what your age is, go get those surgeries. By the way, all this comes in the background as the American Society of Plastic Surgeons, they recently were the first American organization to recommend against transgender surgeries for kids, and that's probably because there was that lawsuit where $2 million were paid out in a medical malpractice case from a woman who was 16 years old when she underwent one of these surgeries. So a lot of these organizations, I think, are getting pretty nervous about the crackdown that's coming in regards to transgender surgeries for kids.
Yeah, you know, Sam, I just love to see this. I mean, praise God that we have right now a civil magistrate that is willing to do this, that's seeing this is a problem, this is criminal, it's evil what's happening to children, and we're going to put a stop to it. Now, my hope and prayer, Sam, is that it's not just a probe, it's not just, okay, we've uncovered this and nothing really comes from it. My hope and prayer is that our civil magistrate will do what their God-given responsibility is to do, according to Romans 13, and wield the sword against the criminals who participate in this. We're talking criminal doctors, perhaps even parents, who have willingly participated in child sexual abuse. Yes, transgender surgeries on children is child sexual abuse, and it needs to be prosecuted as such. And Sam, you know, this is wonderful news, especially in light against the backdrop of what we saw happen in Rhode Island on Monday, I believe it was, a horrible shooting that took place. I believe now 2 people pronounced dead. The shooter was identified as someone who identified as a transgender person.
Well, don't forget, there was also that trans shooter in Canada as well.
Yeah, that's exactly right. So listen, folks, this has got to stop. It simply has to stop. And I believe that the way that we will see this stop, other than obviously ground level heart change, things like that, is when you have a civil magistrate that says no more, we're going to start punishing this. Because it's evil, because it's vile. So really good news there, Sam. Thanks for bringing that to our attention. And speaking of good news, by the way, we also saw, it looks like Goldman Sachs is now dropping its DEI board standards. Love to see that too, Sam. What's going on there?
Yeah, so just as you said, I think they had already gotten rid of DEI pretty much for everything else, but now they're putting the final nail in the DEI coffin here, getting rid of the standards for their board of directors. What's really cool about this is this came at the urging of a conservative nonprofit group. I don't think they really own that big of a stake in the company, but still they had enough of a voice and said, listen, we own this company. We do not want DEI touching anything that we own. And sure enough, Goldman Sachs listened. According to Fox Business, the bank is now removing criteria for board members that refers to race, gender identity, ethnicity, and sexual orientation. So what do you think, Seth?
Sam, I think this is great. And, this is another win. And I think a big lesson for us here, folks, and this is for each of you. No matter your investment size, in a company that is biblically responsible, when you choose to make that decision... Which
Goldman Sachs is not, so you know. But this is just for sake of conversation.
Exactly. This is for sake of argument here. So just work with me for 1 second here. Don't despair the size of your investment. Sam, it's correct here. I mean, this was a relatively small conservative nonprofit group that decided to do impact investing, which we don't do at Financial Issues, but we applaud those who do. I think it's a wonderful thing. We don't do impact investing. We do biblically responsible investing. We don't even get involved in companies like Goldman Sachs. But there are people, Christians out there, who feel convicted in their heart that they say, you know what, I'm going to invest in this company with the intention of changing it. And that's wonderful. Absolutely. We don't do that. They do. But look at what they were able to do here, Sam. This is a small, relatively small stake, and they were able to change the culture all the way at the top. This is the board of directors here. This isn't just some little rinky-dinky side project here. I think it's great news, and I would hope that our listeners would never despair the size of your investment, because there's a huge impact there. There always is. And you just never know what kind of impact you could have on a company by choosing to invest in a company that honors God, or by choosing not to invest in a company that doesn't. So I think it's wonderful stuff, Sam. Really good. Excellent. Folks, make sure to give us a call. Check us out at financialissues.org. If you are interested in learning more about our ministry, you can become a partner there at financialissues.org. And our phones are open. Give us a call, 610-363-1110. Sam, in some not so good news, looks like the Super Bowl trading volume surpassed $1 billion. So I don't know if you all knew this, but a week and a half ago was the biggest American sporting event on the American calendar, one of the biggest in world history, the Super Bowl. And it looks like trades were just...
And by the way, trades are bets.
Trades are bets.
That's a way that betting groups get around saying that it's bets, so they can't be regulated by the government. Exactly. And for whatever reason, the government's going along with that for right now. But that's Kalshi in particular. Their CEO said that their bets exceeded $1 billion. That's up 2,700% year over year. Bets not just on the game. It wasn't just who was going to win or lose, but it was just about everything. For example, there was over $100 million wagered on what was the first halftime show song going to be, and another about $500,000 bet on who are the guest performers going to be. So if you picked Lady Gaga, you made some money there. 67 million Americans wagered a total of $1.76 billion on the Super Bowl this year. That's a year-over-year increase of nearly 27%. And I got to be honest, Seth, I'm not sure if that $1.76 billion includes that $1 billion on Kalshi, because I don't know if we're distinguishing between bets with a sports bookie and these kind of newfangled trade things that are just another form of online betting. Either way, it's a lot of money.
Yeah, whole lot of money. Whole lot of money. That's exactly right. It seems Americans we'll just bet on anything, won't we? We'll bet on is the sun going to rise this morning? What's the color of it's crazy, really. But honestly, Sam, you're exactly right. You hit it on the head. Shame on these betting apps for hijacking language that has historically been understood as investment language. Did you catch that, folks? They're hijacking language. This is so important. That's why we need to understand the meaning.
Well, shame on investing apps for doing it too. Yeah, Robinhood does the same thing.
Robinhood does the same thing, and that tells you, maybe it tells you more about Robinhood than it does about anything else.
Yeah,
maybe
that
it's
might
not
be
so much
true.
an investing app as it is more like a gambling app. But nonetheless, it's a play that people use often, folks, and that's a good lesson for us. Softening language to make whatever you're trying to promote sound nice when it's actually quite vile. I'll give you an example. You hear people calling abortion reproductive rights. There's nothing reproductive about it, and it's not right, it's wrong. Abortion is murder. We need to know what it is. It's the same thing with this. Trades, that's an investment specific term that really, when it comes down to it, is used for the transaction of buying or selling a stock or a mutual fund or an ETF. when they say that, when they say these are trades, but they're actually bets, it's lying, first and foremost. And second of all, it's just utterly deceptive. So no wonder, unfortunately, so many people are conflating gambling with investing, sadly, because so many of these apps are purposefully conflating the two. And here's one more lesson as well, folks. And this is the last thing we'll say about this before we go to questions in the next segment. Let's be really cautious about enjoying such things as sports and entertainment. You can enjoy them, absolutely. I enjoy them myself. No harm in enjoying these things in their proper place, but my goodness, so many people make sports and entertainment their idol. Don't do that. If it's become an idol for you, and it was for me at one point in my life, just move on from it, cut it out. I mean, it's so much better to not enjoy something, but be free from the idolatry of it than to try to enjoy it in a good way and it ends up becoming an idol anyway. Just step free from it. Make God the only God of your life. 610-363-1110. It's great to be here with you, folks. Give us a call, why don't you? We would love to talk to you. Sam and I will be here for the next 45 minutes. We'll be answering a lot of questions today. Grateful to have each of you. 610-363-1110. We'll be back.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God.
That He loves all of us.
He died on the cross to pay for our sins.
That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night.
When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
Bring back free speech to America.
Zuckerberg drops a bombshell, reversing Meta's content moderation policies.
I started building social media to give people a voice. It's time to get back to our roots around free expression on Facebook and Instagram.
Times are changing, and it's the everyday American who is pushing the changes.
People have had enough of what these companies are doing.
Money talks, so why not have it represent your values? Get started at financialissues.org.
Well, I'm going to give a real quick testimony. I've been a partner for 8 years. I count on FISM analysis for my buys and sells. I don't want to be a financial analyst. That's what I'm a partner for.
And we don't want you to have to be a financial analyst.
The Financial Issues Partnership is the best value out there. The analytics you guys do really give me confidence. So thanks for everything, guys. I pray for the ministry every day.
Go to financialissues.org to get started today.
Welcome back to the show, everyone. Good to be here with you this morning. We're grateful for you. Give us a call if you'd like. 610-363-1110. The markets yesterday opened a little bit down. They kind of leveled out by midday, actually, and they ended up squeaking out a win. Each of them did. The Dow Jones was up. It was barely above the flat line.
It's probably because Logan Paul sold that $16 million Pokemon card, right? Gave them the boost they needed.
Don't be surprised to see Pokemon cards as part of the investment strategy.
Yeah,
I'm totally joking.
New form of diversification.
That's exactly right. Yeah, so the major indices, maybe they were keeping their eyes on that. The S&P finished up about 0.1%, the NASDAQ about 0.8%. Russell 2000 was flat. This morning, seems like the pre-markets are feeling pretty good. Investors feeling optimistic. NVIDIA was really popping in the pre-market, up 2%, as fellow Mag 7 companion Meta announced it's going to use NVIDIA's chips for its data center infrastructure. So feeling pretty good there.
So that big AI meeting this week in India, too. So I wonder if that's playing into some of the NASDAQ stuff.
Absolutely. And don't forget, folks, by the way, we do have the release of the Fed minutes from the previous meeting. That comes out this afternoon as well. So the market's keeping an eye on that. It is in the midst of earnings season, too. Let's not forget about what's going on there also with earnings. So certain things that could be happening for sure to move the markets up and down. Sam, let's get to our first question of the day here. Why don't we talk to David?
Yeah, David is in the dock. He says, my wife and I have been partners of financial issues for over 20 years. Thank you, David. That's awesome.
Yeah, that's great.
He says he's 78 years old, and he's thinking about, if I passed before my wife, what is she going to do with our financial issues portfolio? We've been amazingly blessed by our investments from financial issues, following the model and directions, but she's not comfortable taking over management of the account. Do you have any suggestions? Thanks, David and Jenny. So what do you think, Seth?
David, thanks for the question, man. It's a great one. David's 78, by the way, so you're right in that season of life where I think you're asking the right questions and you're thinking through that stuff. And again, thanks for your long-term partnership with FISM, man. It kind of leads to a bigger question here, folks. And the question is this: how do I pass along the investment responsibility of my portfolio to a loved one? This is a very important question. And even, Sam, I got to admit, I'm in my 30s, but I'm already thinking through this too, even just in talking to Megan about this stuff. David, you're operating in great wisdom, and I commend you for it, brother. Psalm 90, verse 12 is a wonderful verse that summarizes what you're doing here. Psalm 90, verse 12, Moses wrote this psalm. It's one of the oldest in our Bible, and he asks God to teach us that he might number our days. Teach us, Lord, to number our days. It's a simple prayer of wisdom that we recognize and plan for the day we die. Simply is what it is. You just understand, my day is going to come. I'm going to leave this earth unless the Lord returns, obviously, and then it won't matter anyway. You're doing this well, though, brother. Furthermore, here's something really important. And gentlemen, listen good here. Gentlemen, okay? Husbands probably will pass away before their wives do. Generally speaking, if you're a husband, you'll probably go first. I'm not trying to be morbid, not predicting the future, but you will probably pass away first. Statistically, and there's always exceptions, but statistically, 60 to 80% of husbands die before their wives do. Whether it's a number of factors. Life expectancy.
We like to eat heavy cholesterol.
Yeah, men like to eat,
and we like to stack two ladders on top of each other when we're painting the top of our roof. So, that plays into it.
And you see the way that little boys are with how they'll just bang their heads into things. It makes sense that men go first. But in all seriousness, generally also you think husbands usually will marry women a little bit younger than them. My wife's a year and a half younger than me. There's an average of a 2-year age difference or so. Not a guarantee, but generally speaking, men will go first. David, I think you understand that. The fact that you're preparing for this is very wise. Again, I'm not saying your wife could go first, but generally speaking, statistically, I think you're preparing for the probability of it. It's very wise there. So your question, David, I think has a lot to do with marital togetherness as much as it does financial wisdom. So I want to give you some things to consider as you wrestle through helping Jeannie, your wife, with managing the FISM portfolio in the assumption that you'll go first. I don't know what model you guys currently use, but it might be prudent to consider moving to something very simple. My guess is you're in either the growth and income or the income model. I would encourage you to consider perhaps starting, and it doesn't have to be all at once, but start to move to the income fund model. The income fund model, based on simplicity, based on your age, based on the fact that it's very heavy not only in fixed income, but also that it's all basically mutual funds and ETFs, meaning you don't need to do any of the management of it. It's actively managed. You don't need to do much of the management, I should say. Heavy in fixed income, heavy in cash, built around the ETFs and mutual funds provided by the Timothy Plan. Even in the fund model, brother, you might even consider a simplified version of it. If you look at the income fund model right now, there's still at least 5 or 6 different slices of the pie there, some of them much bigger than the others. You might consider a simplified version, David. So I'm thinking 20%, 40%, 40%. 20% maybe in a money market and 40% split over 2 of the more conservative Timothy mutual funds, maybe the fixed income fund, maybe the bond fund, high yield bond fund, and then the rest in the money market. You might even do a 50-50 split, honestly. You might even do 50% in the money market and 50% in a conservative Timothy fund. Not saying that if you put it in the Timothy fund, it's not going to go up and down, but built for more conservative. That might be a wise thing for you to do, brother, because again, the name of the game here is you want to make this as simple as possible for Jeannie, as simple as possible. Even all that, though, brother, might not give her the comfortability to manage the account when you're gone, and that's okay. There's nothing wrong with that. So there's some other things you can consider for her. Is make sure, number one, that she has my email address, Seth@financialissues.org. Make sure that she has Pat's email address, Pat, our partner relations specialist. Pat is Pat@financialissues.org as well. She can email us anytime and ask any questions, and we will get them to Mark. We'll make sure that we have an answer for her. If she can listen to the show, I think that's wonderful. I understand not everybody can.
I would say, David, if you could follow up with us sometime, just explain what is she not specifically comfortable with? Part of this is a psychology thing. It's like, how can I make my wife comfortable or feel a certain way? Well, you can't really make anyone feel anything. It's kind of up to them, but we can try to help. And if we have more information, we could probably help with that.
For sure. I'd agree with that 100%, David. Follow up with us. And yeah, if she does listen to the show, I assume that you listen to the show at least from time to time. That's all the better. But perhaps for you guys, it also might be prudent, and this is very important, David, maybe you need to find a financial advisor, and that's okay. There's nothing wrong with that, absolutely. We can recommend one for you or several for you if you reach out to Pat at financialissues.org. We can recommend one for you. You know, David, to kind of bring it full circle, man, I can't say enough good things about the example that you're setting as a man who wants to honor God and provide for his wife. It's really cool, man. That's really cool, and I commend you for it. It's an example for me as a young man to see, okay, when I'm in David's shoes in my 70s, I want to be thinking the same way. I want to be making sure that I'm providing for my wife, even to a point of where I've got her set up. So if I go first, which is the probability, then she'll be okay. That's really good, man. And God willing, listen, you both will have many more years together. I don't know your health. I don't know any of that, but hopefully you got many more years together before either of you needs to cross that bridge. The Lord knows the day that he'll call both of you home. We can take great comfort in that. And all we need to do is be faithful, and I believe you're doing so. So appreciate you so much, David. It's a great question, and God bless you, brother. That's awesome. Good lesson for all of us, folks, that we really need to be mindful of how we are stewarding our families right now and how we're stewarding our legacy right now for the inevitable day that we'll go. And listen, folks, I'm in my 30s. Sam's in his 30s. Any of us could go at any moment. Any of us could. No, none of us knows the day or the hour of our death. The Lord has numbered our days. He knows, but we always need to be ready. Always need to be ready. So let's make sure that we do that. You know, folks, I did want to just share this with you as well, that we are having a wonderful campaign with preborn. We've been trying to raise $21,000 for preborn, saving babies from abortion and bringing the gospel to mothers and fathers through the great work that they do. And I'm so pleased to tell you folks that we're almost at $16,000 as of this morning.
Yeah, you guys have been awesome.
It keeps on rocking and rolling. You guys do such a good job. So we've got the rest of this week. If you're on the fence about giving to preborn, you can do that right now. You can make that secure gift at financialissues.org. Just go to financialissues.org, click that preborn banner there, and that'll take you right to the page where you can give securely.
Or if you're watching on TV, you don't want to get off the couch, look at that QR code right on the screen.
Exactly right.
Hold up your phone, bam, take you right to the website.
That's exactly right. Love that. So make sure that you do that, folks. We've got almost 100 gifts given so far. You can also call them if you dial pound 250 and say keyword baby, pound 250 and say keyword baby, and then you can donate there today. Really good stuff. 610-363-1110, folks. That's the number to call in, and we would love to talk to you. Sam, why don't we keep on moving with some of these questions here? Let's jump on down and let's do, why don't we do Mark's question? So Mark is 67. Sam, it's down in the it's down in the 70s.
Oh, yeah, I see him. Yep. Mark 67, he says, I have PSA, public storage. Don't see it on the broad list. Did I miss a cell? And what do you think about it? He didn't say, what do you think about it? He says, what do you think about it?
That's good. Well, Mark, thanks for your question. I appreciate that. You are correct. Yeah, so we issued a sell for the public storage preferred stock back in January of 2025, brother. So this was kind of part of a bulk sell alert that we issued in the preferred sector. It was really kind of an effort to give partners a chance to obtain somewhat better dividend yields with the options that we currently have on the buy list. Public storage pays a good dividend, but I'll tell you right now, each of the preferreds that are on the buy list actually pay a better dividend. And so that's always nice there. For what it's worth, since we issued this sell, the company hasn't really done much. It hasn't really gone up that much, gone actually down slightly over the last little bit. So yeah, Mark, I would tell you, stay away from this one. Feel free to sell out of this one and get into some of those other ones that we currently have on the buy list. Part of why we love those ones, number one, is they have more of the FISM steel that we're looking for, that strength in a company. And also a slightly better dividend payment isn't all that bad either. So pretty good stuff.
It's a bonus.
Mark. Yeah, it's exactly right. Appreciate that so much. Mark, for you and for anyone else who's wondering, and by the way, this is for partners only, folks. So if you're listening to the show and you're a little bit confused about what we're saying here and you want to become a partner, financialissues.org is the place to go. But Mark, the way that you find when a company was sold, for example, other than asking us, which is what you did, which is great, you can go onto the partner alerts page. If you go there and you just type in the name of the company or the ticker symbol or even the sector, sometimes I find that it's easier to find when a sell happened. If it was like this one, this was more of a sector sell. There were several preferreds that were sold. But if you type that in, you'll be able to find that in those past sell alerts that we have. Again, go to the alerts page, type in your again, whatever search you want to use for it, preferred, public storage, PS, something like that. That would be a good thing for you to do there, and you'll be able to go back and find that. Partners, hope that can be helpful for you all as well. Folks, we do appreciate you being with us. Just a reminder one more time, keep Mark in prayer today. Again, Mark is not on the show today. The reason for that is because he is at the National Religious Broadcasters Convention. We're so excited for this, Sam. This is one of the more exciting things that we get to do every year, is get to attend conventions like this, and it's also a great opportunity for us to get the word out about financial issues.
Seth, this is the only convention that we always go to that I've not been to.
Yeah,
being left out.
There you go. Sam's been to a couple. You've been to CPAC. You've been to some of the other ones. But yeah, this is an excellent one here for sure. Mark's going to be doing some interviews on various radio stations, various television stations, and just getting the word out, making sure that people know that Financial Issues is here. We've got our new host, and it's really an exciting time for them to join up with us. So if you listen to Financial Issues on a particular radio station and you want to thank them for carrying the program, I'd encourage you to do that. That's a great thing for you to do, and we so appreciate our TV and radio sponsors. If you have to leave us, folks, we hope you have a great rest of the day. We got more Financial Issues incoming. The phone lines are open. You can call in. We'll get to questions coming back here, folks, so don't go anywhere. 610-363-1110. We'll be back after this.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
There are moments in life that define us. Before investing.
Welcome back, folks. it's great to be here. Hey, I do hope that you are able to join us on our live chat because we have a very special sighting in the live chat. Mrs. Celia is in there with us. We're so grateful for her getting to join on the chat. So make sure to say hello to her if you're in the chat there. Always wonderful to see
I like
her.
to call her the queen of FISM, the queen of financial issues.
Right. Exactly right. That's awesome. So great to see you there. 610-363-1110. Folks, don't be shy. You can give us a call. We'd love to get to talk to you. Sam, before we get to questions, let's take a quick look here at the markets as they've now opened, and they are on the rise, it looks like. As my screen refreshes, I apologize. Yeah, each of the major indices is up about a 1/4 percentage point. So that's what we're looking at this morning. 610-363-1110. Sam, let's talk to Bobby. Let's hear what Bobby has to say.
Bobby is 34 years old. He says, "Hey, Mark." Hey, Seth. He says, "I have several different investment accounts, rollover IRA, Roth IRA, and just a regular brokerage account as well. I have several stocks that I bought several years back that I have gains in those individual stocks that are anywhere from 50% to 800% gains. My question is, when do I sell and what do I do with the income from those gains? I do not necessarily want to sell the stocks because it's still growing on the hold or the buy list."
Bobby, it's a good question, man. I appreciate it, and I'm so glad that you've seen those stocks do really well. That is a gift from God. So let's tackle it piece by piece here, all right, brother? Question 1, when should I prune back a winner? That's the age-old question, isn't it? Because you don't want to miss out if it's up so high and it comes back down, but you also don't want to prune too early and then it shoots up 20, 30% the next day, which can happen as well. Here's when you prune back. Number 1, if your allocation is out of balance. I think that's always across the board. If one particular holding has risen so much that it causes you to become noticeably out of balance in your allocation, I'd think it's time to pare it back at the very least.
You know, Seth, is it just me or has this been a theme this week? A lot of people ask me about this kind of question.
Which is great. I mean, that's, folks, that's proof that you're doing a good job and the proof is in the pudding and you've seen some gains and now you're starting to ask the question. It's also indicative, as we've talked about as well, of a high market valuation. I think it is important to note, Mark mentioned earlier this week, that perhaps the markets are not quite as overvalued as they were at one point. We're starting to see more and more of a nice dispersion across various sectors as opposed to everything just being in the tech sector, particularly in the Magnificent Seven. It's starting to look a little different, which is great, by the way. Not saying that it's still not very highly valued. It is. But we're seeing a little bit of strength there. But all that to say, yes, Bobby, if that particular holding has risen so much, the run-up is just crazy. I'd be less concerned actually with the numerical run-up. So don't worry so much if it's up 50%, 60% or anything like that, as much as it is if it's overweighted your particular sector or even in that particular stock, then you pull it back. If you see a winner that's risen so much, trim it. No need to sell out of it. In fact, it's probably good not to because there's a good chance that it'll continue to show some strength, but just pull back to an area that's comfortable. Also, you hear us talk about this a lot on the show, folks, and I don't mean to beat a dead horse, but it is so important. Bobby, if it's messing with your sleep factor, pare it back. If it is causing you anguish, if you're like, oh, I love this stock, it's great, but it's up really high. Part of me is thinking, I want to be greedy. I want to keep, and I'm not saying that you're being greedy, Bobby. It's just human nature. We see the stock keep going up and we see it go, and I'm like, it's up 100%, but imagine if it was up 200%. Don't even play the mind games there. Just imagine. There's no end to that.
You can imagine anything.
It's up 1,000%, 2,000%. Don't play the mind games. If it's messing with your sleep factor, just sell it. Just sell at least sell part of it. No need to sell all of it again. But if you're someone who is naturally a little more risk averse, which all of us have a little bit of that in us, even the most aggressive investors, right, Sam? Like even us, we understand, I'd love to lock in those gains. I'd love to not lose. So all of us have that, and you want to capture some of those gains. You can't go
I'm not putting all my savings accounts.
That's right. Exactly right.
into some really aggressive stocks or anything like that.
And Bobby, one more thing too. These mind games are so important. Don't play the what if game. Anybody in the chat, have you ever done that? Have you ever played the what if game where you've said, you've sold a stock, maybe you sold it at a good price, but as soon as you sell it, you're like, oh, should I have waited? What if it's going to run up 20%? What if it's going to run up 50%? Should I have waited? Oh no, what if 5 years from now I see it's up $1 million and I'm like, oh, why did I sell out of it? Just don't do that. Don't even do it. Sell the stock, take the profit, pay any capital gains if necessary if you're in a taxable account, thank the Lord for the good return, and move on to the next investment without keeping an eye over your shoulder, because you can cause yourself such anguish if you do that. If you can sleep at night, you're honoring God, you're comfortable with the amount of risk you're in, Bobby, I'd say it's a great place to be, and then let it keep riding. I think that's totally fine too. So hopefully that helps that first question. Second question, Bobby, is what should I do with the income from the gains? It's a good question as well. And the simple answer is it's really up to you. But even in that, I think there's a few things I want you to think about. The answer is it really depends on what type of account you're talking about. I think also as well as your goals for this money, your investment goals, long-term, short-term. If these gains are in either the Roth or the traditional IRA, I'd encourage you to just look to reinvest those gains into other buy list holdings, because you can't access the money penalty-free for another 25 years. You're 34, you said, so you're not going to be 59 and a half for another quarter century. That's a great thing. That's a gift, because it gives you time to let that money grow, Bobby. It really does. So I would say if it's the Roth or the traditional, just look to reinvest it into other buy list holdings. If it's in a regular brokerage account, which I think you mentioned in your question that you also have a regular brokerage account, if it's in that one, you still can't go wrong with reinvesting. You can go long term as well, but you also have the option of accessing that money for short term uses without any of the penalties. Of course, factoring in if it's a big gain, capital gains taxes and all that. I wouldn't count out that either, Bobby. That's one of the benefits of a regular brokerage account, and they're comparatively speaking, I mean, there's so many benefits to the IRA, especially the Roth, but one of the benefits of the regular brokerage account is you can use it for short-term uses. If your transmission blows, you can afford it, not dip into your moat around your castle. If you need an HVAC update, some other short-term need that can keep you out of debt, keep the moat around your castle strong, might be something that you consider as well after factoring in any capital gains taxes if necessary. Bobby, it's great questions, brother. A lot of it's really up to you, but just some things for you to consider. I appreciate your heart to invest with biblical integrity, brother. And well done there, man. Well done. Sam, what do we got next?
Up next, Linda, age 74. I would like to know which account I would put the large cap income value fund in the IRA, Roth IRA, or an individual account.
Linda, it's a good question. I appreciate that. Generally, here's generally what you do. If you're faced with the question of which account to prioritize, I would always add to the IRA first. I would do the Roth and then the regular in particular. The reason the IRA should be first, mainly there's no threat of capital gains tax on those gains that you make. And the Roth gives you the added advantage of tax-free growth. So you pay the taxes up front and then you're off to the races. I would do that. I would suggest IRA first, Roth then regular, and then the individual investment account. I think that'd be a good thing for you to do. Appreciate the question, Linda, so much. Boy, I wonder if we have time to get to one.
I was going to ask for that. And would you say, Seth, that kind of generally applies for all stocks in general?
I think so,
math,
Sam.
not just the large cap income fund.
And that's just my opinion. But yeah, generally, Linda, it's not just the large cap income value fund. I think it's really any investment that you have, generally speaking. There are always different things that you have to consider. And Linda, for you, again, this goes back to Bobby's question. You might need to consider, is this a short-term or a long-term need? And then you'd think, okay, maybe I will prioritize in a different account. But generally speaking, all things being equal, seems to me like the best thing to do is IRA first, and particularly the Roth, regular, and then the regular brokerage account. And that's pretty much across the board. Pretty much. Great question, Linda. Really appreciate that. I don't know if we're able to squeeze in one more question here. Sam, we did get an interesting one on the chat, though, and maybe we'll have to save that chat comment for later on.
Just want to tease it, right?
I do want to tease it. So, why don't we save that for after, folks, because we do have our weekly ag focus here. Craig Haugaard giving us what we need to know for our farmers and ranchers in the agricultural world. We appreciate you joining us so much here, folks. And I do just want to remind you, if you're interested in learning more about our ministry, maybe you're a new listener. We've been getting a lot of new listeners lately. Check us out at financialissues.org and consider if maybe becoming a partner is the thing that you might want to do with your finances. You really can't beat it. $132 a year. Check it out, financialissues.org. Click that Become a Partner button there. More questions on the other side of this break. Here comes Craig Haugaard, and then we'll be back.
This is Craig Haugaard with your weekly Financial Issues Ag Focus. Today I'd like to talk about the reliability of USDA reports. Now, the United States Department of Agriculture is facing mounting doubts about the reliability of its data from farmers, grain traders, and economists following the January supply and demand report, in which we saw a sharp upward revision in how many acres of corn were harvested. The USDA's final estimates in January for how many corn acres farmers planted and harvested in 2025 represent represented unprecedented increases from the initial estimates that we had in June of 25. Already low grain prices sank more than 5% at a time when growers were already struggling to make money. The revisions prompted the USDA's National Agricultural Statistics Service, which releases the estimates, to launch an internal review, according to Lance Honig, who is a top NASS official. As part of its review, Mr. Honig says that the USDA will confirm that its procedures worked as they should. He added that the agency is also exploring options for improving harvested acreage estimates, most likely without additional farmer surveys. Some analysts say that farmers' reluctance to respond to surveys and last year's increased plantings may have also made it difficult to estimate acres. Now, response rates for these surveys have fallen from 80 to 85% back in the 1990s to just 46% response in 2024. Now, probably most notably between 2019 and 2024, the response rate dropped below 50% for the first time, with fewer than 74,000 responses out of an average of 148,000 surveys issued since 2020. This seems to be indicative of a greater mistrust of government that we are seeing. However, this data is widely used due to the wide swath of information it contains. It is used by farmers to make decisions about marketing or storing grain, financial institutions for analyzing credit decisions, industry analysts for developing forecasts, and many other uses. That makes data integrity crucial, so hopefully we can see that integrity restored to the USDA's reports. Well, this has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
So grateful for you folks. I appreciate you all. So many of you have said some wonderful, encouraging things in the chat. Nothing like our chat. It's pretty awesome. If you don't have access to it, you really need to. It's very easy to. You can get it on the app, the FISM app, or financialissues.org/watch.
Reminder, we do have an app. I saw some people in the chat say, wait a minute, there's an app? There is indeed.
Yeah, absolutely. So make sure to check us out there, folks. Hey, Robert brought up a real interesting question in the chat, Sam. Robert is saying he heard a report that Walmart is moving closer to being BRI. Is there any chance they'll they'll make our broad list. So, Robert, we've been keeping an eye on Walmart because we did hear some pretty good news overall that it seems like Walmart is moving away from the DEI stuff. And also, Sam, it looks like they did not file with the HRC.
Yeah, that's right.
Which is a good sign as well.
I just was looking, and they did not file a report with the pro-LGBT human rights campaign this year. So, that's a good sign. But as far as we can tell, they're still dirty.
Exactly. And Robert, that's really the key. Is it's great to see that. We want to see more of that. Unfortunately, they're still pretty dirty, especially as it comes to promotion of the LGBTQ agenda. So perhaps moving in the right direction. The company is very strong still. It remains very strong from a financial perspective, strictly speaking from a financial perspective. But if it's not strong from a biblically responsible perspective, we won't even touch it.
Just a good reminder that DEI and BRI stuff, there's a lot of overlap between that, but it's not exactly a one-to-one thing. I always like to make the comparison, DEI is like smoking cigarettes. It might give you cancer. It probably will give you cancer, but not necessarily. Right. But just because you're not smoking cigarettes doesn't mean you don't have cancer, if that analogy makes sense.
Exactly right. Well said. So, Robert, appreciate you bringing that up. We will be keeping an eye on that one, especially in the history of the ministry. That used to be one of the favorites before it went non-BRI. So, appreciate you bringing that up, Robert. Sam, let's get to Adam here. Adam's asking a good question.
Sorry, I was so involved with Robert. There we go. No okay, Adam's question here. Yeah. He said he's been a partner for over 10 years. Thankfully, my portfolio has done very well. However, now I have several stocks that are in the 1% plus mix of total, but now they're less than 1% overall. Question, dollar cost average by buying more over the next 6 months, or sell them and buy new items from the buy list and sectors as sectors come available?
Adam, it's a good question. Thanks for asking. And, it's tough to give a specific answer based on just not knowing exactly what those stocks are, how far up or down you are in them, the strength of them. But nonetheless, I think either option is good for you, brother. I really do. I like the habit of dollar cost averaging. In my opinion, just a good habit to get into in general. You think about this. Either way, you're feeding a winner, which is always fun, and building that bonfire even higher, or you're putting more into a downer, but it still has that FISM steel that we talk about. And as such, you're creating those new bottoms. I love that idea. I love that every time you put into it, you're creating new bottoms. And for the most part, I'm a big fan of it. Now, of course, there are seasons where you might not be doing dollar cost averaging as much, depending on your risk tolerance, the viability of the stock. Generally, though, it's great. But I do want you to be careful as well, not to feed a loser. And I'm not saying that the particular positions that you're in are necessarily losers, but they might be a little weaker. Generally, I tell you, it's wise to feed the stocks that are on the buy list. These are stocks that we really believe carry that FISM steel, that strength. But also, Adam, no harm in selling out of those that you've been in and then buying from the buy list as those sectors become available too. I think that's a great thing for you to do. I really like your 6-month timetable. We talked about this yesterday with a listener. I can't remember if it was a caller or if it was one of our listener questions, but this listener was feeling a little bit skittish, and we had talked about how having
Melinda?
I think it was Melinda, yeah. So we're so grateful for you. I know you're a new partner, Melinda, and we appreciate you so much. And we had mentioned yesterday that 6-month timetable can be such a good thing for you because it just gives you kind of an end goal, and it can help you sort of structure, okay, this is when I'm getting in more and more in.
Takes emotion out of it too. You don't really have to think about it too much. You just know, all right, this is automatically what I'm going to do, whether the market's up or down, I'm getting in.
Yep, that's exactly right. So, Adam, if you want a dollar cost average over the next 6 months, if they're strong companies, or if you want to sell and buy new ones from the buy list as sectors become available, either way is up to you, man. It's really good. And you can always follow up, Adam, if you have specific questions about these companies. Give us a call. Put the question into the Hey Mark portal. We'd love to be able to talk to you about that because we can certainly give you some insight on these. Obviously, whenever we talk about a specific stock, it's no guarantee that the stock is going to do well or do poorly, but we do see in our research indications and signs of strength or weakness. So if you've got a question, man, ask us. We'd love to. Speaking of companies that have strength or weakness, Sam, Chad is 43. He's asking about one of these specific companies. Let's get to his question here.
Chad is asking about E68 in his Roth. He's had it for several years now, but now his accountant has told him that he does not need to report the K1. Recent remarks on the show have made me wondered if I should revisit this. Is there a threshold for reporting like $600 or $1,000 of income per year? With 16 years until I reach 59 and a half, should I consider replacing this stock with something more aggressive? Thanks so much for answering so many times. Chad, again, he's age 43. 2023.
Good stuff, Chad. Never feel bad about asking the same question, brother. It's a joy to be able to do it. Let's tackle each one individually, Chad. You're asking some good questions here. So first one, is there a threshold for reporting a K1 in a Roth? No, in and of itself. Technically, no. There's no income threshold based on your personal income for reporting the Schedule K1 for a Roth IRA. And by the way, my disclaimer, I'm not a tax professional, but that is the truth of this. When you're in a Roth IRA or any IRA actually that holds an investment like a partnership or an LLC that issues a K1, the key consideration for you, Chad, is the unrelated business taxable income. It's known as UBTI. It's often shown in box 20 with the code V on the K1 form. Normal investment income, so that's interest, dividends, capital gains, passive rents, all that inside the Roth IRA is tax deferred or tax free on qualified distributions, and it does not require reporting on your personal tax return. However, if the K1 reports UBTI, that's the key consideration. If it reports UBTI, the IRA itself then could be subject to unrelated business income tax, that UBTI. And you guessed it, you're exactly right. The threshold for that is $1,000 of gross UBTI. I'm guessing that's where you got that from. And so you're thinking rightly, Chad. That's really good. If the gross UBTI is $1,000 or more, then the IRA has to file a Form 990T to report and pay any tax due on the net UBTI. So that's done by a custodian or a trustee, or sometimes you can arrangement. The tax is paid from the IRA assets themselves. And if it's under that $1,000 threshold, just like you surmise there, Chad, there's no Form 990T that's required. You can generally ignore the K1 for tax purposes. You might want to keep it for your records, though. So all that to say, technically no, but if there's UBTI, then yeah, you do need to consider that. It's a good question. Your second question, should I consider replacing this stock with something more aggressive and a long time horizon until I start drawing down? Good question, Chad. I like your thinking. I really do. I would say with this stock in particular, E68, there's nothing particularly against it. And not even replacing it fully, but instead just paring back on it. This stock is a good, solid income play. So it's less of an aggressive-minded long-term grower. It's a nice, stable, balanced income play. If you were 73, Chad, I'd say great position, stay in there. But you're not, you're 43. This pays a fantastic dividend. It's in the 8+% range, good attributes for a long-term hold, but you seem to be more aggressive. You're 43 years old. You've got 16 years until you're gonna start drawing on this money in your Roth IRA until you're 59 and a half. That means you got a lot of time to be more aggressive. Now, I'm not saying, folks, don't hear this, okay? Just because Chad is in a growth or aggressive portfolio doesn't mean that he shouldn't have a little bit of income exposure. That's a good thing. Absolutely. That helps with diversification. But generally, your portfolio is going to be heavy in growth and aggressive. So if I were you, Chad, I might consider looking at E29 as one, E39, E43. These are good, solid energy plays, but they have some more growth potential for your long-term time horizon. They're not just kind of solid, going to pay a good dividend and maybe not really move much. They might be aggressive, so they're going to be volatile. They're going to go up and down, but long-term, you got 16 years, so that's a long time horizon, plenty of time to grow. Chad, I'd say all that to say it's really up to you. You can either replace altogether, you can leave it where it is, beef up your energy sector. I personally like leaving where it is because I think it's good to have a little bit of that income exposure, but no need to add to any more of it. I would say add to one of those other positions if you got room to grow. It's a great question, Chad. I really appreciate it. Sam, let's quickly get to Roger before the end of the show here. I think we can squeeze this one in.
Yeah, Roger is 72, and he wants to know if we're researching the possibility of adding the following three stocks to the buy list: UAMY, USAS, and USAR. And Seth, if I'm not mistaken, I think all of these stocks are like metals or mining mineral stocks, right?
They are, yeah. And each of them are clean. UAMA is somewhat strong against the market. There's not a lot of strength within its sector right now. It's been trending a little bit downwards as of late, so that's not one we're thinking of jumping into, Roger. USAS seems to be a little bit stronger. It was actually particularly strong several weeks ago. Not as much right now, so it's not one we're keeping an eye to jump in at the moment. USAR, though, I want to mention this one. It's clean. It's pretty strong against the market. It's strong against its peers, and we could see some uptick. The U.S. government did take a $1.6 billion stake in this one. We talked about it on the show recently. Right now, it's not very profitable, but it's got good cash. The debt level is also a very good sign. It's debt-free, which is really good. So, Roger, I'll tell you, we do have an eye on USAR. We're keeping an eye
now, Seth,
on it.
I don't want to, give too much behind the scrim, though, but I do remember talking about this stock with some of our team, and there was, weirdly, some concern on the reverse side that the fact that the government has taken a stock in this company could be a negative thing for investors.
Sam, you're exactly right, and that's part of why we have not pulled the trigger and put it onto the buy list yet, is because we want to see some real solid strength as opposed to just the boost from the U.S. government. Not saying that it is that, but we'll let you know if it's time to make a move on this one. We do have our.
I mean, it happened with Intel, right?
Yeah,
I saw the boost.
Yeah, that's exactly right. So I would urge you, don't pull the trigger on it yet, but keep an eye on it. We're keeping an eye on it as well. Boy, it was a great show, folks. I appreciate you all so much. We got a lot of questions answered today, and it was great to be here with you. It's always a joy to be on Financial Issues. Tomorrow, Mark will be back. We're looking forward to hearing from him at NRB. Thank you all for your heart to honor the Lord with your money, and thank you for investing with biblical integrity. God bless you all. We'll see you tomorrow.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.